Welcome to the deep dive. We are cutting through the policy documents and official communiques to deliver the clear, actionable intelligence you need.
Today, we are undertaking a critical deep dive into a policy that, well, it really represents the most significant attempted reversal of fortune in decades for the world's third largest economy, Japan's GX2040 vision.
GX, of course, meaning green transformation.
Exactly.
And that's really the key context here. I mean, for 30 years, Japan has struggled with stagnant investment, low growth, the infamous lost 30 years. Now, the Cabinet Office has approved a strategy that's trying to pivot the entire economic structure away from fossil fuels and toward what they're calling decarbonization-led economic growth.
It's a huge bet. They're framing climate action not as a cost, but as the only real engine for future prosperity.
And that kind of pivot needs capital on a scale that is, frankly, unprecedented.
Which brings us to our mission today. This deep dive is for you, the serious international investor. We're going to dissect the official plans, detailing how Japan aims to mobilize, get this, over 150 trillion yen in public and private investment.
All over the next decade.
Over the next decade.
We'll unpack the policy, the new financial tools, the market guardrails that they're putting in place for predictability, and crucially, the specific geographical zones where this enormous amount of capital is set to land. This is the roadmap for where your investment should be focused in Japan through 2040.
Let's get into it.
Okay, so let's unpack this monumental undertaking. Committing 150 trillion yen, that demands more than just a vague goal. It's like you need a whole new operating system for the Japanese economy.
You do.
So what are the core interconnected pillars that underpin this whole GX 2040 vision?
Well, the vision is designed to fundamentally shift who gets capital and where energy is consumed. The documents, they identify three areas where the government is really applying its regulatory pressure and its financial incentives.
Okay, what's the first one?
The first pillar is creating a GX industrial structure. And this is about way more than just funding clean tech. It requires a really deep reform of corporate management of capital markets.
They're changing the culture, really.
It is. The goal is to discourage that short-term thinking and force companies to prioritize long-term, sometimes high-risk investment into new GX businesses and supply chains.
And that includes the smaller guys, the startups and SMEs.
Absolutely, especially deep tech startups and SMEs.
That's a huge institutional hurdle. I mean, you're talking about changing how Japan Inc. operates, forcing capital markets to value a company based on its long-term decarbonization plan, not just its next quarterly earnings report.
Exactly, and if they pull it off, it creates a very powerful incentive for investors.
So what's the second pillar? Where does this growth actually happen?
The second pillar dictates the physical location of this growth. Establishing GX industrial sites, or in Japanese, GX Senji-Richi.
All right.
This just acknowledges a hard truth. Clean energy, whether it's solar, geothermal, or next-gen nuclear, it's tied to specific regions.
You can't just build it anywhere.
You can't. So the policy is to strategically concentrate the high-demand industries, think massive data centers, advanced semiconductor fabs, right next to these stable, clean power sources.
That's a direct link between energy supply and digital demand. It creates these specialized clean energy neighborhoods. So what's the third pillar that ties it all together?
The third is the economic engine that guarantees the incentive. Growth-oriented carbon pricing.
The market mechanism.
Right. It introduces these crucial mechanisms to give investors long-term predictability. It's explicitly designed to be a signal to the market to incentivize decarbonization, not just to punish emissions.
Interesting.
Now, to hit that 150 trillion yen target, Japan knew it couldn't just rely on its existing fiscal tools. The government had to, aggressively de-risk the initial phases.
Which is where the bonds come in.
Which is where you get the GX transition bonds.
So this is the government stepping up first, providing that seed capital. Is that right?
Precisely. Japan actually pioneered the world's first government-led transition bond issuance. They're aiming to issue 20 trillion yen over 10 years. That started back in February 2024.
And that's what they call the leading investment.
It is. It's a calculated catalyst designed to mitigate that early risk and secure the much, much larger private investment goal.
So the point isn't just to raise money. It's to steer which sectors get capital first and, I guess, to establish a global benchmark for what even qualifies as a legitimate transition investment.
Absolutely. The whole framework stresses the use of blended finance, combining public money with private funds to aggressively expand investment, especially in those areas where private companies are, traditionally risk-averse.
And where are those funds being channeled?
They're going into high-priority targets that are seen as crucial for national competitiveness. So things like rapid infrastructure development for next-gen energy.
Hydrogen, ammonia supply chains, that sort of thing.
Building out hydrogen and ammonia supply chains, developing advanced battery storage, and funding the R&D and deployment of technologies like CCUS.
Carbon capture.
Right, carbon capture, utilization, and storage.
Mm.
The focus is always on achieving industrial leadership by solving the decarbonization problem.
So the bonds get the ball rolling, but private capital, it needs certainty over decades. This is where that growth-oriented carbon pricing model you mentioned becomes really critical for an international investor.
It does everything.
So how is this system structured to guarantee that predictability?
The policy uses two major components, and they're phased in over time. Both of them feed the overall GX investment fund.
Okay.
First, starting in fiscal year 2028, we get the fossil fuel levies. The official name is the Kaseki Nenri Fukiken.
And that's a fee on importers.
It's a fee imposed directly on fossil fuel importers and power generators. It provides a very steady, very transparent revenue stream.
Okay, that's component one. And the second is the cap and trade system.
That's the emissions trading system, ETS. It's scheduled for full operation starting in fiscal year 2026.
But it starts off voluntary, I heard.
Initially, yes. Companies participate voluntarily through something called the GX League. That lets the market mature. But the system gets a lot more serious, starting in fiscal year 2033.
What happens then?
That's when electricity generators will have to start participating in paid auctions for their allowances.
That phased rollout, it suggests they want the market to adapt slowly, minimize any initial shock. But the most important thing for long-term capital is risk reduction. If I'm looking at a project like hydrogen infrastructure, I need to know future prices will justify the cost.
And that's the function of the unique price stabilization mechanisms that are built right into the ETS. This is what really sets the Japanese model apart. The system provides two critical guardrails, a ceiling and a floor.
Okay, explain the ceiling.
The ceiling price. If the price for emissions allowances spikes too high, maybe because of a geopolitical event or just unexpected demand, the government steps in and supplies additional allowances.
So it prevents excessive costs from hitting the economy, protects industry.
Right. It's protection against inflation and volatility.
But what about the other way?
Equally, and maybe even more important for a serious investor, is the floor price.
The lower limit.
The lower limit. To guarantee the long-term incentive for GX investment, a minimum price for allowances is maintained. This is especially relevant for those power sector auctions starting in 2033. The government is essentially underwriting the long-term risk of decarbonization.
So the floor price is a guaranteed minimum return for anyone investing in, say, a 30-year low-carbon project. It protects them from a sudden drop in political will or a collapse in carbon prices years from now.
Exactly. It dramatically reduces the regulatory risk for committing major multi-decade capital. The whole structure is built for predictability, designed to attract global institutional capital.
Given this commitment to financing and stability, where is the government actually directing the physical infrastructure? The council discussions, they highlighted a need for speed and focused investment. So if you are an international firm looking at FDI, what are these GX strategic areas?
Right. The GX industrial site policy is it's a complex initiative. It links infrastructure, incentives, and regulatory reform, often inside Japan's existing national strategic special zones.
Right.
But it's all about one thing, regional concentration near clean energy.
And there are three types, or archetypes.
Three main archetypes. The first is the combinat renewal regeneration type.
Okay, combinat as in the old industrial complexes.
Exactly. These projects use existing industrial assets, think former petrochemical sites or brownfields, to create new GX businesses. The working groups noted that reusing these sites, like the one left by an ammonia facility closure in Ube, Yamaguchi, it often requires huge regulatory reform.
Especially around things like soil contamination, right?
Complex soil remediation and land use issues, yes.
So that archetype sounds like it has high long-term return potential, but probably carries the highest implementation risk for investors.
It does. The second is the data center aggregation type.
The DC type. This makes sense, given the power needs of AI.
The explosive demands of AI and DX, they need massive, stable supplies of decarbonized power. So the policy is to put these large-scale data centers near the power hubs, emphasizing what they call the watt-bit linkage. optimizing power and high-speed communication together.
And this isn't just about energy. The documents mention economic security.
It's a huge factor. They explicitly talk about reducing Japan's deficit in the digital services trade balance, so less reliance on overseas data hubs, and of course, better domestic data security.
So that's type 2. And the third?
The third is the decarbonization energy utilization type, or simply GX industrial parks. These are new areas designed specifically to guarantee a high supply of decarbonized power.
From renewables or nuclear.
Renewables, geothermal, stable nuclear, whatever the local source is. The goal is to attract companies whose products get a competitive edge from a green energy label. An example they cited is a new site in Yatomi, Saga, that's aiming for a guaranteed 100% renewable supply by 2030.
This links directly to global supply chain pressure, but let's pause on that. The sources seem to reveal a critical tension here. These new sites, especially the massive data centers, they are huge energy consumers.
They are.
And they're often located far from where the clean energy is actually generated.
That is the geographical challenge Japan has to solve. The policy has to ensure that the regions supplying the energy, the communities hosting the new wind farms or nuclear sites, that they receive real, tangible economic benefits from the investment happening in the consuming regions, like those distant data center hubs.
Right, because if the benefits aren't shared, local support just collapses.
Exactly. The regional consensus will fall apart.
Now let's turn to execution. The vision is set, financing is in place, but moving from a blueprint to, shovels in the ground always reveals bottlenecks. What are the key challenges in investment sectors that the working groups identified?
Well, first, the most immediate challenge is the need for speed and regulatory flexibility. This is especially true for deep tech and startups.
The red tape.
The Council recognized that existing, sometimes antiquated regulations like safety certifications for small-scale equipment can just choke innovation. Regulatory reform is explicitly called for to encourage risk-taking and attract foreign talent and investment.
And are we seeing direct government support targeting this issue? Any specific examples of where that money is landing?
Absolutely. The government is backing innovative firms like Elephant Tech, which works on CO2 reduction and circuit board manufacturing, and Terawatt Technology, which is focused on next-gen lithium batteries.
And the battery goal is huge, isn't it?
It's a massive investment signal. The goal is 120 GWh per year of domestic capacity for advanced stationary batteries by 2030. That alone opens up enormous opportunities in manufacturing and supply chains.
Okay, so speed is one thing. What else?
Secondly, you have to look at the GX-DX linkage. Decarbonization and digital transformation, they're completely inseparable.
How so?
Well, the plan accelerates DX across the board. AI for demand forecasting and managing smart grids, robotics in manufacturing, even specific housing standards like ZEH and ZEB0 energy houses and buildings to maximize efficiency. And semiconductors, which power all of this, are highlighted as crucial for both national security and the GX goals.
Finally, let's talk global context. We know foreign policies like the U.S. Inflation Reduction Act, the IRA, are influencing Japan. How does the GX strategy position Japanese industry to compete?
Well, on one hand, Japan wants to enhance its own energy security, reduce dependence on volatile fossil fuel imports. But the competitive threat is immediate.
From global supply chains.
Right? Global giants, your Apples, Microsofts, Foxcons, they are already pressuring their Japanese suppliers to hit 100% renewable energy use by 2030. If you can't meet that demand, you are cut out of those critical supply chains.
So it's an existential threat.
It creates both an enormous threat for slow movers and a massive opportunity for Japanese leaders in clean tech. The GX strategy is designed to help companies in sectors like sustainable aviation fuels, green hydrogen, next-gen steel to become essential parts of these international green supply chains. It's a direct response to foreign industrial policies.
So we've dissected the ambition, the financing, and the geography of Japan's 150 trillion yen bet. What's the bottom line for the international investors synthesizing this deep dive?
The takeaway is clear. Japan is making a massive, credible commitment that GX, the core engine of future economic growth. The issuance of the GX bonds and, critically, the creation of those price stabilization mechanisms in the carbon pricing framework, the floor and the ceiling. That offers a financial predictability that's explicitly designed to attract major long-term global capital.
So your focus should be targeted. Look for high-impact opportunities linked directly to those designated strategic areas.
Yes.
Especially data centers near stable power, deep tech startups, solving heavy industries problems, and that massive battery manufacturing ramp up to hit the 120 GWh target.
Absolutely. But as we discussed, The sources reveal a complex political challenge. The success of this whole thing may depend less on technology and more on achieving regional political consensus.
Right.
The government has to devise a mechanism to make sure that the regions supplying the decarbonized energy, the local communities hosting the projects, receive a fair share of the economic benefits generated by the distant consuming regions.
The age-old battle between energy producers and consumers.
Exactly. So final thought for you is this. What specific mechanism will the government successfully implement to bridge this political and economic gap? The answer to that question will define the political viability and therefore the investment certainty of the entire GX strategy for the next 2 decades.
A fascinating challenge at the intersection of energy, economics, and regional politics. Thank you for joining us for the deep dive.